So another product that's offered in finance is Gap, which, not to be confused with Gap Insurance, it's actually a Gap coverage when you buy it at the dealership, because most of the time finance guys aren't actually insurance brokers. They don't have insurance licenses, so what they're selling is basically a coverage that guarantees a certain outcome. So what Gap is if you were to total your vehicle, your full coverage insurance that you have through AAA or State Farm or Liberty Mutual or whoever else will cover whatever they think the value of the vehicle is. Some of them have clauses in their insurance policies that say that they'll cover up to a certain amount over if you owe more, and other things like that. And for Gap, when you buy it, it's going to cover up to 125% or 150% of the MSRP of the vehicle. So that's going to be in the fine print in your contract. Typically, it's going to be 150%. Most of the time, it doesn't cost really any extra to do the 150% of the value of the vehicle. So if you were to total your vehicle, your insurance will give you whatever they think that the car is currently worth as far as an insurance settlement. And then if you owe more to the bank than that, then you're responsible for paying off the additional value of the vehicle. So if your car is worth $20,000 and you owe $25,000 on it, then you're going to only get $19,000 if you have a $1,000 deductible from your insurance, and you're going to be responsible for that $1,000 deductible plus the additional $5,000 of negative equity that you have in the car. So if you're rolling negative equity into a new loan, or if you're putting no cash down, or you're buying a car that depreciates really quickly and you're doing a long-term loan, then Gap can be something that's really beneficial. I know no one plans on wrecking their car, but it's something that can happen. And it does cost typically somewhere in the neighborhood of about $800 to $900, depending on the vehicle it's on. At least with some of the cheaper cars like Subaru, Toyota, Honda, you're going to see it be somewhere around like $895 in California. That's what most credit unions will allow you to max out at. And the product actually does have a decent amount of profit in it too, but being a lower cost coverage, it doesn't have as much profit in it as, let's say, like an extended service agreement. So Gap can be really useful. I wish I had it on my car, just because if anything happened to me right now, my car, I am negative in it. But you don't need it all the time. And the benefit to it, you can actually cancel it too. That's something that they don't tell you. They don't want you to cancel it. But you can cancel it once you get into an equity circumstance and get a percentage of it back. It's all based off of how long you've used or how long you've paid your loan. So if you have a 72-month Gap policy for your 72-month loan, and you're only 36 months into your car payments, you could get, hypothetically speaking, somewhere around 50% of the cost of your Gap coverage back. So that's just a little bit on Gap, just kind of a little bit of an intro on it. I would say if there's no point in buying it unless you're driving a ton of miles, or you're doing a really long-term loan, or your car, you're expecting it to depreciate a lot, or you're rolling a bunch of negative in from another vehicle. That's the only time that I'd say it's worth it. And a lot of times it's already going to be included in your lease if you're leasing a car, depending on the brand. So yeah, thank you very much. If you like what you're watching, if you could please subscribe right below, and plus press the bell icon to give you notifications when my new videos come out. So yeah, thank you very much for watching.